Even the most seasoned investors are facing challenges in today's market. The stock and bond markets are still volatile, inflation is high, and the Federal Reserve has raised interest rates. Furthermore, geopolitical tensions, continued COVID-19 outbreaks, and persistent supply chain issues are sabotaging global recovery. Alternative investments may play a significant strategic role in select portfolios when a perfect storm strikes and typical investing playbooks are no longer successful. If you've ever wondered, what are alternative investments? We got the answer. Beyond the stock market, there are a variety of investment choices. We've compiled a comprehensive list to help you find them. In this video, we'll go over the possible benefits of alternative investments and how they differ from standard asset classes and provide you with a comprehensive list of alternative investments to look into right now. Stay tuned to learn about those benefits and arm yourself with knowledge before dipping your toes into those murky waters. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Since the volatility of stock market, many investors are looking for safer methods to invest their money. As a result, alternative investments have grown in popularity. Any investment that isn't one of the three standard asset classes, stocks, bonds, or cash, is referred to as an alternative investment. Alternative investments, on the other hand, do not replace traditional investments. Investors should not sell their equities, cash out their savings accounts, and invest their whole portfolio in these non-traditional investments. They can help diversify a portfolio and give prospective income while also acting as an inflation hedge. To put it another way, instead of placing all of your money in stocks, diversify your portfolio by investing in stocks, bonds, and alternative assets such as hedge funds, private equity, and even fine arts and wines. Traditionally, high net worth people and institutional investors, such as private endowments, have been the primary beneficiaries of many of these alternative investments. This is due to the fact that many alternative investments necessitate higher initial commitments than stocks or bonds. Furthermore, while fine arts, wines, and other collectibles may be exceptions, practically all alternative investments are less liquid than standard investments, meaning they cannot be cashed in as quickly or readily. Nonetheless, there are certain benefits to alternative investing. Hedge funds. Hedge funds, like other types of investment funds such as mutual funds, pool money from several investors and spread it across a variety of investments to maximize the likelihood of a positive return on investment. The Securities and Exchange Commission, SEC, regulates hedge funds less strictly than other types of funds, allowing fund managers to invest in a wide range of financial instruments. The Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010 imposed certain additional standards and restrictions on hedge funds, but it was more concerned with reporting and openness than with where fund managers invest. Managers of hedge funds can invest in stocks, commodities, derivatives, futures, options, and other financial instruments. This wide margin of safety frequently yields excellent results. Hedge funds around the world rose in 2010, while many stock markets declined or only achieved little gains. Hedge funds, on the other hand, have a high entry barrier in the form of $500,000 minimum investments and high fee structures. Those with the means to invest in hedge funds should exercise caution. Although not all hedge funds are volatile and high risk, investors should do their homework on the fund and its manager before committing. Venture capital. Venture capital is a sort of private equity that focuses on startup enterprises that are still in the early stages of development. Venture capital businesses invest in these companies at the very early stage and receive a return when the company issues stock or sells it to another company. Typically, that return on investment does not appear for another 10 years, if at all. Because venture capitalists invest at such a young stage in these businesses, their investments are very hazardous. They do, however, disperse their capital over a wide range of businesses in order to reduce the firm's overall risk. On the downside, most venture capital funds have a high minimum investment requirement and require individual investors to have a net worth of roughly $1 million. Venture capital is also notoriously illiquid. Most investments must be held for several years before being turned into cash. Real estate. Real estate has always been a popular alternative investment option. Of course, the 2008 real estate market meltdown in the United States made many people wary of investing in real estate. However, with prices still at historically low levels, real estate might be an excellent investment. Individually purchasing a rental property, joining a real estate investment group, or purchasing shares in a real estate investment trust are the three most accessible ways to invest in real estate. Rate: if you find the right renters, buying rental property may usually give a regular, reliable income. However, costs like property taxes and regular care, as well as significant time and effort inputs, can limit profitability. Real estate investment groups provide a hands-off, low-risk approach to real estate investing. A collection of private investors puts money into a corporation that buys a property, usually a condominium development. In exchange for a percentage of the monthly fee, the corporation oversees the property. A real estate investment trust is another possibility. Rate: they make real estate investing extremely accessible to the general public. A REIT is a company that invests in real estate and receives preferential tax treatment from the IRS in exchange for paying the majority of its profits to its shareholders. REITs are one of the most liquid alternative investments because they may be purchased on public markets. Another advantage is that REITs, like stocks, pay out regular dividends. Private equity. Investing in a company that does not issue public stock is known as private equity. When a company reaches a certain level, such as an initial public sale of stock or a merger, investors contribute capital and receive returns on their initial investment. Startup enterprises in high-tech industries, such as telecommunications, biotechnology, and, more recently, alternative energy, have benefited from private equity funding. An investment's success or failure is determined by how well a startup company performs, which is a risky undertaking even in a booming economy. As a result, high-net-worth individuals and venture capital firms have been significantly more engaged in private equity than small investors in the past. Investors are frequently involved in influencing the management approach of a rising company. Individual investors have a few alternatives for investing in private equity, but working through a private equity firm to join a pool of investors is a pretty safe option. It is, however, rather costly. A $250,000 to $25 million buy-in is required by many firms. The most secure choice is to invest in exchange-traded funds, which buy stakes in multiple private equity ventures simultaneously to reduce investment risk. There are compelling reasons to allocate a portion of a portfolio to private equity. During the first half of 2010 and over the previous 20 years, private equity fund indexes outperformed the stock market, despite the fact that returns were lower than the stock market. What distinguishes alternative investments from stock market investments? Because alternative assets are not traded on mainstream exchanges, pricing transparency and liquidity are often lacking. It's simple to see how well Amazon stock is performing, but it's more difficult to tell how well specialist assets like farmland are performing. Similarly, selling 5,000 shares of Amazon stock is easier than selling 5,000 acres of farmland. This, however, isn't always a terrible thing. Alternative investments, on the other hand, are frequently unaffected by diminishing traditional market values because they don't vary in lockstep with the market. Alternative investments can help diversify your portfolio while also reducing your stock market exposure. A low-risk list of alternative investments, such as antiques, wine, and coins, to mention a few, are unlikely to make or lose a lot of money, creating a potential for passive income. Another significant advantage of alternative investing is the option to invest in tax-advantaged retirement plans, such as your IRA. Even though some assets are restricted in retirement funds, the list of permitted alternative investments is still quite extensive. Alternative investments, on the other hand, can provide benefits that go beyond simply increasing wealth. You can feel good about contributing to a cause you care about by dedicating some of your money to more specific enterprises like startups or film. As is the case with alternative investments, higher rewards are usually accompanied by higher risks. That is why, if you are evaluating numerous possibilities from a list of alternative investments, you and your financial advisor must conduct due diligence to determine which options are best for you. This is especially important given that alternative investment performance is not publicly available, making excellent intel more difficult to get by. The truth is that there will always be some level of risk, so it's crucial to think about critical factors before investing and to be honest about your comfort zone. With this, we have come to an end. The content in this video is for educational purposes only and hence should not be considered financial advice. All the financial decisions should be made after doing your wide-spectrum research. If you have found this video useful, please check out Part TWO, where we have covered more of alternate investments. Also, make sure that you like this video, comment down your thoughts regarding this video, and also do not forget to subscribe to our channel to stay updated about the latest videos. Until then.